Good morning, everyone. Happy Sunday. Hope everyone's having a great day. So, uh, sorry if I seem a little unprepared. It's because I am. A lot of you know that I got a washing machine this last year, and it was just stuck on 1 minute for a long time and it was shaking, and that's why we're late also today. Okay, so. Um, I had some articles penned that I wanted to share with everyone. Where can I find it though? It was about like hybrid vehicles and things like that. Anyway, it was like about how hybrids were better than EVs. As always, if you guys have topics that you want to talk about in the comments, just let me know in chat and we can address those things. For Debbie, I know she's going to ask me about the movies. So, right now, the number one movie where I work is called Perfect Days. It's a foreign film by Wim Wenders, and I have not seen it yet, but it's supposed to be really good. And what else? The Oscar nominated shorts, both the live action and the animated. Last week we were talking about car insurance rates, and I had wanted to actually like try and find an article and see like what the news recommends we do in order to lower our insurance rates. So I think I'm going to try and do that. It's going to come up with my YouTube ad stuff first. How to lower your car insurance in California. We'll type it all out. Okay. Okay, Wallet Hub. This seems good. Interesting. So you guys know I use Rakuten, and I'm saying right away that if you get your insurance through Rakuten, that you could potentially save $5. But $5 isn't very much. All right. I tend to like CNBC, so I think as long as there's no paywall, we will read this article. Okay, 6 ways to lower your car insurance, or car insurance is more expensive than ever. Here's 6 ways to lower your rates. This article is by Liz Knuven. And this was updated Thursday, February 15th, 2024. So just about a week ago. It's not your imagination. Car insurance has gotten more expensive in recent years. Premiums are expected to increase 12.6% on average in 2024, according to a report by personal finance site Value Penguin, with the nationwide average for full coverage hitting about $165 a month. Drivers in some states will feel the pinch even more. Rates in Nevada are predicted to leap by 28%, according to the report, which was based on data from the Quadrant Information Services database. I don't know what that is. Overall, car insurance rates have spiked 29% since 2018, with a 25% jump in the last 2 years alone. I'm going to take a sip of coffee. You guys know that means to like the video. Also, I don't know if anybody who watches the channel knows anything about washing machines, but if anybody knows why mine would have gotten stuck on that 1 minute mark and just kept spinning, I eventually just turned the power off because it was done. It was literally stuck on 1 minute for a long time. It was no good. Anyway, I know somebody that used to be in my Graham Stephan mentorship. He has a channel called Washer Dryer Money. Maybe he knows. Anyway. Okay, so car insurance. Sorry, I'm distracted because now my clothes are in the dryer, but there seemed like the dryer's being weird. Anyway, overall, average car insurance rates have spiked 29% since 2018, with a 25% jump in the last 2 years alone. And here's the thing. If you go back and you watch like one of my early pandemic videos, I had one of the first things that I did when I got laid off. Hi, Joy and Joey. One of the first things that I did when I got laid off was I started calling all of the companies and like I lowered my insurance rates. I canceled my gym membership. I didn't cancel it because I have a good one, but I put it on pause. I canceled subscriptions. So I actually called because sometimes too, like my mom's friend has a car and I think it belonged to her daughter and her daughter passed away. And so she just left the car like kind of sitting in the driveway. You're still supposed to carry insurance on the car, but you can I think, but you can claim that it's not like that you're not it's not in operation. I think you can do that for your car registration as well to make it lower. And maybe if you're just not operating at all, you don't have to carry insurance on it. But anyway, what was my point in saying that about the insurance? Oh, so when I called to lower my insurance, I was like, hey, I'm not going to be operating the car. Like literally, the news is telling everybody to stay home. So I'm not going to be driving, or I'm going to be driving very, very minimally, only for the necessities. Can you lower my rates? And they did. So that's definitely one of the things that I did is I called right away. And I want to say that my insurance was like $120. This is what I was doing. $120. And then they lowered it to like $96 and times 0.29 plus 96. So this would mean that my insurance should be about $123.84 right now. And I think that's what mine is right now. Hold on, let me see. I just got my bill for my car insurance. Let's actually see what it was. It might actually be closer to 160. But then maybe I need to do the math on not the rate that they lowered it. Let's see. Hold on 1 second. No, Geico, 123.18. So that, yeah, mine has gone up about that 29%. Okay. The reasons why it's gone up is from lingering inflation and the rising cost of repairing and replacing parts to an uptick in severe weather and an increase in the number and severity of accidents. Even with rates on the rise, though, you don't have to break the bank to pay for premiums. I also just want to take this moment to say, I think, yeah, I mean, everybody's rates went up. So Joy and Joey, that's what we were kind of talking about last week. So I was looking for an article to kind of like an actual article with advice on insurance. Because last week we just talked about it. I didn't have any facts up to kind of compare against. But yeah, I think everybody's did. And my mom she's at the point where she is oh, don't worry about multitasking. So yeah, I mean, I'm fine. I'm just kind of like recapping. So I don't mean to like slam you if you missed me saying that, yeah, my insurance rates have gone up too. But I'm more concerned about my mom's, right? Because she's getting to the point where she really doesn't drive very much. So she's really weighing the pros and cons of if she's going to keep her car. And then Alex, who's a regular in the chat, was talking about how their insurance really went up a lot recently. So I wanted to have like actual news to back up like the advice that I was giving. So sorry if anybody's bored because we talked about this a lot last week, but we're going to talk about it again this week too, because I'm always going to be passionate about saving money. And if this is the information you guys need, this is what we're going to talk about. So one of the things that I think is interesting that I just want to side note on is so they're saying that the insurance is going up because when there's an accident, it's a lot more costly. I know that we shouldn't be on our phones when we're driving, right? But I will say, just watch how my face and body posture is. This is what I think a lot of people do. I think they hold their phone down by their hip when they're driving and they text with their thumb, right? So I'm not looking at the road if somebody has their phone down their hip and they're texting, or I have to look down and then look down up and look down and look up. You used to be able to talk on your cell phone, right? Now, while maybe that's not a good idea to talk on your cell phone, like maybe that is distracted driving, but at least my eyes and one hand is where it's supposed to be. Versus if you're texting and your eyes are down, of course there's going to be like, anyway, so I guess my point is I don't think that they should have outlawed talking on your cell phone and driving, because I think I like the intentions are good and the intentions I agree with. But I think that most people still text and they're now what they're doing because they don't want a ticket is they're not some people will just hold their phone right up in front of their face. But most people, I think they're like, oh, I don't want to get a ticket. I don't want the cops to know that I'm like texting while I'm driving. So I think they hold their phone down low, which then makes their eyes like look towards their hand, which is like by the gear shift. And then I think they're not paying attention to the road. So I think the intentions were good, but I'm not sure it worked. Okay, Sylvia said that she saved some money by taking off towing and car rental. Yeah. So, and on the flip side of that for car insurance, last week we were talking about how some people have both, they want AAA, and they have car insurance. And maybe they have a new car. When I bought my Prius, it came with 2 years of roadside assistance, which is basically what the towing is. And then car rental would be if your car needs to be replaced and they would like, or if you're in a really bad accident but they're going to fix your car, that you would, they would give you a rental car to use while you did that. And Joy is saying, yep, that their insurance went up and most insurances are not renewing home insurance as well. Yes. And Joy, that's something that I need to look into. Maybe we'll look into it together during this live. My home insurance, the people that I've been with for 12 years, they straight up just sent me a letter and they're like, we're not insuring houses anymore. Good luck, lady. I think that they're going to just sell the policy to someone else and that they'll take over the policy. But I'm kind of expecting what I've kind of loosely budgeted for is my homeowner's insurance rates to double. And with my house, I have a flat roof. I replaced the roof when I bought the house and there's no leaks. Knock on something wood. So like, that's great. But my roof is now 12 years old. So I have a 12-year-old flat roof with no leaks. It's been a great job, but, yeah, I'm going to need to look into where I can get home insurance because the place that's insured me since I bought this house won't be doing it again next year. And I mentioned my flat roof because when I was shopping around for insurance rates, right? Because that was something I wanted to do as well as lower my homeowner's insurance when we were all furloughed. I lowered everything. But when I called around, people, I don't know why, but they don't want to insure homes with a flat roof. My guess is maybe there's not like a good drainage system. And like if your roof begins to sink in, like water would pool there and could potentially like cave the roof in. I really don't know. And for me, I'm getting really close to paying my house off, like less than 3 years. But the bank makes you carry homeowners insurance. Like you don't have the option to not carry it as long as the bank owns your house. So I'm not sure, like if I went to my bank and I was like, hey, I literally can't find anybody to insure my house. Like, I'm not sure if they would help me. I'm not sure if banks are going to be getting into the home insurance business. I'm not sure if I'm just going to have to pay through the nose to get insurance, but I'm estimating that it'll go up about double. But right now, I think my home insurance is $638 a year. So even if it doubles, that would be about $100 a month, which I think is pretty good for homeowners insurance. I don't know. Anyway, okay. So back to CNBC Select sharing 6 tips to get the best price on car insurance. Oh, what they're going to cover. They're going to cover bundling home and auto insurance, which PS, if we're going to talk about this, Geico is one of the companies. So I have Geico for my car insurance. They don't bundle on my house because of that flat roof. So I think I'm really, really, really going to have a hard time. And that it's so interesting because like what do you do if you really can't find somebody? Does the bank just would the bank be like, well, we're going to take your house if you can't find insurance? Like as a first-time homeowner, I don't know. I don't know what the consequences would be. I don't think they could take my house, but like I don't know what they would come back and say if I was really having that issue. But anyway, for me, as long as I stay with Geico, it's not an option for me to bundle my home and my car insurance because of the flat roof. I guess maybe an option would be to totally change the style of my roof so that it's not a flat roof anymore, but that would be like a really crazy costly project. Like it would be, let's just hypothetically say, I've looked into this a little bit. We're gonna erase some stuff. Okay, so my car insurance is currently not my car insurance. My home insurance is currently $638. So even if it doubled, we'll call it $1,200. Let's call it $1,300 just to be on the safe side. So that would be another $638 a year, roughly. This was just an estimate. So, but a new roof would cost like, I think $20,000 minimum for me to change the entire style of the roof. I'm not sure if you guys are able to see this right now. I'll take this away for a second. So 20,000, we're going to divide that by 638. Boy, my pen's not working. Divided by, let's see, 638. How much would that be? Okay, gotta get our calculator. Now I almost dropped my pen. We're having a day today, guys. Okay, 20,000 divided by 638. That would take me, so even if my insurance, like basically I could pay double my homeowner's insurance for 31.34 years and it would still be cheaper than changing the roof. Like, I guess I could go to tiled roof. Also, like, but the way my house is, like, it looks cute with a flat roof. And again, knock on wood, when I bought it, I had to replace the roof. All right, Sylvia, we're going to look into that right after I actually get back to the point and do the car insurance tips. Okay. California Fair Plan. And I think that's what my mom had said to look into too. All right. So car insurance tips. Bundle home and auto insurance. Pay your annual premium in full. That should save you a little bit of money, but sometimes it's only like $2 per quarter. So maybe that'll only save you $8 a year, but $8 is still $8. Pay per mile car insurance. That might be an option for my mom. If you're not driving a lot and you're just paying per mile, maintaining good credit, taking advantage of discounts, ask for a higher deductible, and bottom line. Okay, so bundling your homeowner's insurance with your auto insurance, that's basically just bundling them so that they're insured by the same company. And it says on average, you can save 14% on your premiums. And again, get quotes from different companies to see what discounts they offer for bundling and find out what their policies cover so that you can see if you're getting a deal. And again, that would be because you want to what? You want to make sure that you're getting comparable coverage. You want to make sure that you're not getting less coverage if you still need the same amount of coverage. So that's why you want to see that. And it says Farmers Insurance offers home and auto insurance as a bundle that the company states can save customers 20% on average. Farmers had above average customer satisfaction ratings in both auto insurance, shopping, and claims, according to J.D. Power and the National Association of Insurance Commissioners. Received fewer customer complaints than average regarding its auto insurance. I will say that I have heard that they're a little bit more expensive, Farmers Insurance. Pay your annual premium upfront. Many insurance companies charge a fee for dividing your premium into monthly payments. Paying it all up front could save you as much as 12%, according to car insurance comparison site The Zebra. Interesting. Interesting. It's also saying to get a high yield savings account, which would help you save enough to cover the bill and earn some interest in the process. If paying your yearly premium all at once isn't feasible, look into whether your insurer has a discount for going paperless or enrolling in automatic payments. Geico customers who set up auto pay, for example, can save up to $36 a year. And guys, I do have my car insurance through Geico. And I do have the auto pay set up, so I'm probably saving money there. Also, Joy and Joey, don't worry about taking me off subject. Like, it's been like a strange morning anyway. So I'm just happy that I'm happy you guys are making sure that I'm kind of thinking about what I'm going to do about this whole homeowners insurance thing. Oh, and I just realized I'm not sharing my screen, even though I'm doing this. Okay. Today, I hope it gets better. I have to work today. So hopefully I'll get it together. Also, I feel like I'm scattered because I'm Mom, I don't even know if I told you this. I'm going out of town on Tuesday and I'm coming back on Thursday. I'm going for a really quick trip with a friend. We're going to go see Stevie Nicks play in New Orleans. So I work today. I work tomorrow. Then then I'll be flying out Tuesday morning. We're seeing Stevie Nicks Wednesday, and then I'm flying back on Thursday. And then I'll work Friday, Saturday, Sunday, Monday, and Tuesday. So it's going to be a little bit of a hectic week. But Mom, I don't know when I'm going to see you. Okay. Pay per mile insurance. If you work remotely or you don't drive often, a pay per mile policy could be a good fit. With this type of insurance, you're charged a flat daily rate with an additional per mile surcharge, typically a few cents per mile. There is a trade-off in privacy since most pay per mile programs require drivers to attach a device that tracks their vehicle's mileage, speed, acceleration, and braking distance. That's interesting. But someone driving just 500 miles a month could save about $38 a month with Nationwide's Smart Miles program, which is available in 44 states. The plan even has an exception for road trips with only the first 250 miles counted in a single day. I don't know about that. I also don't know if that's available. Oh, no, it does. Okay. Metromile is another strong contender in the pay per mile space. It offers discounts of up to 15% for bundling auto with Lemonade home or renter's insurance. Availability is limited to Arizona, California, Illinois, New Jersey, Oregon, Pennsylvania, Virginia, and Washington State. Maintain good credit. Now, this is interesting because I didn't know that having good credit also could affect your car insurance rates. But this article says, in most states, your credit score affects the price you pay for car insurance. Oh, okay. Well, this is good for us here in California. Only California, Hawaii, Massachusetts, and Michigan ban insurers from linking your credit to your premiums. I have a feeling that's good for most of my viewers, but for me, I have a really good credit score. So if they did do that, I'd be able to get a discount. Anyway, they're not allowed to do that here in California. Need to work on raising your credit score? Experian Boost is a free service that reports consistent payments that wouldn't normally be seen by credit reporting agencies like rent, phone, and subscription service payments. But again, if you're in California, you don't need to worry about that. Take advantage of discounts. So bundling home and auto isn't the only way to save. Insurance companies offer a variety of discounts, including safe drivers, student, members of the military. You might even want to ask if they offer a senior discount because they might know that seniors don't drive as much. One of their top choices for car insurance, they're being like the people who wrote this article, or I guess CNBC. State Farm offers good drivers discount up to 30% when they use its Drive Safe and Save mobile app to track their driving habits, including braking, cornering, and phone usage. Interesting. Offering competitive service rates for veterans and their families, USAA gets high marks for customer satisfaction, in addition to 10% off for bundling. USAA offers other discounts for safe driving, auto pay, good grades, legacy policy holders, multiple vehicles, and for storing your vehicle on base. If you're in school, Geico offers a good student discount worth up to 15% on certain policies if you maintain a B average or higher. CNBC has praised Geico for its nationwide availability, low rates, and inclusive coverage, including for high-risk drivers. And guys, I think I shared this last week, but if you were like tuning in and out, I don't know why this is, but Geico, if you live in Los Angeles County, Geico is going to be like the cheapest for you. Okay. Let's see. Sylvia, it wasn't this week that I was going to go to church. I just said one Sunday I might go to church. I don't know which one. So no, I didn't do that today. Hi, Anthony. You had to spend $1,600 to fix your car, a new water pump, and now your bank account is suffering. What a rough week. Yeah, I can definitely sympathize with that. My car broke right before I went on my big trip, which is like exactly when you don't want it to break. It's like whenever you need it not to happen the most seems to be like when it happens. So that sucks and I'm sorry. Okay, but hopefully that means the rest of your week can only get better. All right. Joel says, water pumps are a major job. Sadly, it will cost many customers north of $1,000 to do it. Also sad, most Americans can't afford a $1,000 surprise bill. So our shop finances. That's nice that your shop finances. And let's, you know what? I don't think I've shared my savings strategy before with that. I don't have $1,000 sitting around for a surprise bill, but I can do things differently when I need to get the money. So, for example, and boy, right now would be a bad time for me to have an emergency because I'm working really hard. I get paid on February 29th, and that's when I'm paying off the electrical bill to do the washer dryer. Okay, so, but it's due by March 1st. So I have zero in savings. Literally zero. So if I have $1,000 emergency, now I do still have like my Yada bank account, but that's just like where my money goes from like my paycheck and everything. And then, but I've been wanting to make a video about this. I live paycheck to paycheck on purpose. So here's how I would handle a $1,000 emergency. I would put it on a credit card that gives me points. Oh, and I would also like to say this trip that I'm about to take this week, the hotel was not covered in points, but both of the flights are. So I'm not paying for flights. I'm using airline miles to pay for that. Oh dear. Is my hair getting really thin? Anyway. Okay. So I would put it on a credit card. I started to spell credit again, card that issues points. I put everything on a credit card to get points. This isn't for people that aren't good with credit. But for me, I tend to pay I pay my balance off full. I haven't not paid my balance off in full since I was like really, really young, probably in my 20s. So I would put $1,000 emergency on a credit card that's also earning me points. Then I would do a couple of things, right? Here's another thing about the credit card. It's not necessarily going to be due even at the end of the month. So normally, and depending where you are in the billing cycle, like I have one credit, and to give yourself a little bit of buffer, let's say, hi, Debbie, let's say that you know that your credit card statement closes on March 1st, right? And let's say your car broke down yesterday. You could potentially ask the person who repaired your car not to run the payment until March 1st when your new billing cycle starts. If they're willing to do that. So let's say it's on March 1st that they do it when your new billing cycle hits, right? And your new billing cycle won't necessarily be the beginning of the month. So you need to know when your specific new billing cycle is. And then the billing cycle closing date is going to be like March, for me, it'd be March 24th. So when your billing statement closes, that's when that $1,000 shows up. So it doesn't even show up until March 24th. And then usually, then you'd have to like April 14th to pay it off. So it usually works out somewhere to like about a month and a half that you have to like save up. So even though I don't have the $1,000 saved up, I would have a month and a half to get $1,000 saved up so that I don't pay any interest on that credit card. You want to avoid paying interest on the credit card and pay it down at all costs. Debbie will go over movies again in a second. Although if you rewind the live, we did talk about it. We got out the little green guy, but we'll go through it again in a second. Okay, so this is really like 45 days. So then it's like, I need to come up with a way to get $1,000. So I would do a couple of things. That's when I would go on a really tight budget. Really tight budget. So that means like bringing your food to work. That means I'm not going out to eat with my friends. That means I'm not buying any new clothes. That means I'm thinking about even like planning my errands and where I'm going to drive so that I'm like using my gas efficiently, all of that. Some things that I'm fortunate enough that I don't always pay attention to in my day-to-day life right now. Not all, I mean, like I'm a budgeter, right? Like, so I'm always sort of thinking about those things, but I usually have some room, and most of us normally have some room to tighten up our budgets. So I would tighten up my budget. I would sell things on eBay. I generally contribute more than the minimum amount to get the company match to my 401k. So to get the company match, in my situation, that to get the maximum company match, I would want to contribute 6% of my pay. But I often contribute 15% of my pay. So I change back the amount, change the amount I'm contribute to 401k. So I would take it down from 15% and I would put it down to 6%. I still want to get my company match, but if I have a bill that I'm racing against time to pay off, I might not be able to do that. So I change my contributions. And in this almost 45 days until I need to make the payment, from the time I put the thing on the credit card to the time I need to pay it off, I'm hopefully going to have 3 paychecks to do that. So I would have 3 paychecks where I'm getting more each paycheck because I changed the percentage that I was contributing to the 401k. And then lastly, I do have my Robinhood and my Webull accounts. Those are brokerage accounts. Those aren't tax advantage accounts. So I can get money out of them before retirement age. So I could cash out from brokerage account, not from an IRA or a 401k. Stocks, cryptocurrency, that kind of thing. Also, so that is how I would get the money to pay off a $1,000 unexpected expense when I don't have anything saved up right now. So I would tighten up my budget. I would sell things on eBay. I would change the amount that I'm contributing to my 401k. And if that still didn't get me that $1,000 that I need in about a month and a half from the time I put it on the credit card to the time the payment's due, that's when I would cash out I would sell something from like my Robinhood or my Webull accounts. And I shared this before, but looking back, while it's nice that I have money in a brokerage account, I feel like I'm not going to be putting more money into Webull or into Robinhood or any regular brokerage account because I would rather keep contributing the maximum amount to my 401k. And by maximum, I don't mean the maximum to get the company match. I mean the maximum to get the tax advantage, which is like $22,500 this year, I think. So it's a lot. Like on a normal year, I'm going to say that I contribute like 7 or 8,000 in my 401k. So anyway, I should have been maxing out my 401k to get the tax advantage before I had money in the brokerage account. With that said, I'm glad that I got all my free stocks from all the different brokerage accounts. So that's Robinhood, that's Webull, that's M1 Financing, that's Moomoo, and that's Public. So 5 different companies. I used all the links and got all the free stocks. And usually you have to fund the account in order to get those stocks. Sometimes it's as low as $1. Sometimes it was as much as $100. And I'm glad I did that part, but I shouldn't have put any more in it. Not until I maxed out the 401k. But it is nice because once the money's in the 401k or an IRA, you can't really get it out without paying a penalty. So on the one hand, it's nice to know that if I needed to, I could pull money out of that. I shouldn't have put money in until I was fully funding my 401k. So I would have, if I could hold that magic crystal ball and go back, I think that's what I would do. But anyway, okay. So Debbie says, California is and will be getting more and more expensive for us taxpayers and legal residents as we have been mandated by this government to pay for all the illegals in the state. Debbie, you may not like this. I had a friend, one of the people that I went to Egypt with, when he first came to the country, I met him when I was 13 or 14. So I've known him now 30 years, and he is a legal citizen now. He was not legal when he came to the country. This is what I always tell my mom. And the thing is, like, his mom for years and years and years worked under the table jobs, like jobs that probably a lot of Californians wouldn't want, right? Those of us who were born in California or born in the United States and moved to California, like she worked as a house cleaner, and I know some of us would take those jobs, but there are a lot of people who wouldn't, right? And especially not for the wages that she was paid, and not for the no medical insurance. And her kids, right? She brought them here to have a better life, the American dream. And my friend Abel, I don't know if I was supposed to say his name, but he's legal now. But so I guess it's okay. Anyway, he puts so much money into the economy because he loves to make clothes, and so he's buying all the supplies, and he pays a personal trainer, and he's doing really well in life now, but he's always been like that, even when he had to take under the table jobs. And in terms of the under the table jobs, I don't blame like the people who came here illegally. I blame the employers that are trying to get labor for cheaper than is legally required, because that really is the issue, is that there's jobs and that there's employers willing to pay people not the legal amount. And then that gets into, why would an employer do that? Can they not afford to run their business unless they're paying like not the legal amount of minimum wage? Like, I don't know why that happened, but I will say that for my friend, for his mom, for his brother, when they got sick before like they were legal citizens, he was like, we can't go. We cannot go. Like they weren't taking any resources. And maybe things have changed, in the 30 years since I've known him. But he was like, we can't go to the hospital. Like, I can't risk like somebody finding out that I'm not legal here and getting sent back. So I can't speak for every situation, but at least in my friend's case that I know, they were so scared to potentially, like, they didn't take anything. They wouldn't even take care of themselves when they really were legitimately sick, because of fear of like being sent back, of somebody finding out that their status was not on the up and up, that they weren't supposed to be here. So he would never risk that in order to do that. So I'm not sure what programs are currently available, right? I don't know that. What I do know, now let's see, Sylvia says 99% of people work hard no matter how they arrived. People coming here are a gift to America. Yeah, I mean, that's what I think. And like, here's the thing, right? I know, I like, it's not like a secret that in the crops, like kind of in Central California, like the strawberry fields and things like that, a lot of that work is done by illegal immigrants, and they're not given good housing. They're not getting any of the benefits that people who are born in America are. Like, their employers not taking out Social Security tax, and they're not paying into Social Security. So when they get old, they're not going to be drawing in on Social Security. And people don't want to pick strawberries. Like, I gotta admit, I wouldn't want to be in the fields picking strawberries all day long, in the hot sun. Like, that's not for me. Would I do it? Like, if it came to like, do I need to pay my mortgage on my house? Absolutely. Um, but by choice, I wouldn't want to do that. And I think what happens if you don't have workers that will do it for a very low wage is it gets replaced by robots. And I would rather give a person a job, any person, than a robot. And I would rather those people have the opportunity to make enough money to one day go through the process of becoming a legal citizen. And people really struggle, and they go through a lot of hardship to get here because there is still opportunity to like have a better life. Even if you have to go about it illegally initially in order to originally get on the right path. And I think I'm so emotional about this because like I personally know somebody and like watched him struggle. And I wrote a letter to the courts saying why I think he should be granted citizenship. And he had to get like 15 letters from like people to like vouch for him that he should be allowed to stay here. And to me, like, of course he should be allowed to stay here because like he's my best friend and he's lived here his whole life. Like, he doesn't know the country. And he had already been here for a while, like when I met him at 13 or 14. To him, this is where he grew up. This is his home. So I don't know. Like, I don't know why his mom chose to like bring him here illegally versus legally, but like it's a long, long, hard, expensive process. It just is. But even given that, there's still a path to do it. There's a way to do it. And they did it. And like I'm so glad. And I'm so glad that he's legal now and like we don't have to worry about that. But for years and years, he worked and wasn't getting any money put into the tax system, into Social Security, into any of that. And like, I do think our taxes are too high here in California. I think that we have a lot of programs. I think we have a lot of programs that aren't working and a lot of money that's not spent properly. But the not spending properly, that's kind of what I think one of the biggest issues is. What was I talking about last week where I had a really good example of that? don't recall, but I know that one of the things my mom was looking at when my grandma was in like an old folks home, I don't know what else to call it, a retirement home. But it was run by the state, and my grandma was no longer walking, but they submitted for new shoes for her. Like, if she's not walking, my mom was like, what does she need shoes for? Like, just put her in some socks. Like, why go through? Like, that's just like an extra step. And like, hospitals have like the slippy socks or the no slippy socks. So like, why not just give her some socks and call it a day if she's not out walking around? And there is a lot of spending like that. Or like, they'll give you like, if you're trying a new medicine, this happens to my mom a lot, but like, let's say that your doctor prescribes you a new medicine and you're not sure if you can, like, if your system can tolerate it. Sometimes they just start you off with like a 90-day supply. And then, especially with my mom, she winds up that she's allergic to the medicine and she doesn't go through the whole 90-day supply because she finds out after day 3 that she's allergic to it. So like, maybe if it's a new medicine for people, maybe just prescribe them like a 10-day supply, see how their system tolerates it before we waste money paying for like an entire 90-day prescription. And maybe it's not quite 90 days for my mom, maybe it's 30 days. But I normally get my medicines in a 90-day supply. And sometimes I get stuff that I don't wind up taking. Okay. Debbie says, of course, all people work hard. Not all people pay into the system, which is what supports the border crossers. Without legal documents, they cost us. But see, I don't know about that because they don't pay into the system. But a lot of times then they're not, like, at least as they get older, they're not drawing out of that system either because there's no record of them being here. So they can't draw out of, like, at least not out of Social Security. And a lot of times they don't get the medical care, even if they really actually need it, because they're scared of being sent back. So I think a lot of times, a lot of the people who arrived actually illegally, like, don't even use resources that are available to them because they're scared of like getting sent back. I also think, personally, I think that what Trump did to the DACA kids, like the Dreamers, I think is absolutely horrible. I don't think that it's right for one president to say, hey, yeah, like, make yourselves known. Like, if you were brought here illegally under a certain age, like, you're going to be allowed to stay here. And then another president comes in and is just like, nope, we're not going to guarantee that you can stay here anymore. Like, how terrible is that for a person that they think, okay, like, I can work, I can contribute legally, I'm going to be allowed to stay in the country. And then someone else just comes in and is like, no, never mind. Like, I think that there's a lot of things really, really broken in the system. And I certainly don't have the answers, right? Like, I can only speak from my one friend that I know, and I know that he's a good person. I know that he spends into the economy. So I know that he, the money when he was working under the table, now he's legal. So he can he's paying into the system. But when he wasn't, like, he was, oh, that's weird. I don't know how to fix that, and I don't know why it's doing that. Hold on, Debbie. Let me see here. Trying to fix my YouTube so that it's not showing you guys ads in the middle. Hold on. Manage videos. Okay, hold on. Live. Sorry, guys. I'm trying to like change this so that it's not showing. It's not. So it's supposed to just be doing this live ads. Okay, I saved a new setting, so hopefully it will stop showing a ton of ads. Okay, Um, Sylvia says sales tax, gas tax, utilities tax, but yes, not the taxes that benefit us in the long run. But I see your frustration. Yeah. So, but I mean, to my knowledge, he wasn't drawing on anything. Like he wasn't getting any government assistance to be here. My personal friend, but yeah, like the sales tax alone. Okay, so he's he's gay, right? Gay men oftentimes like they're buying like the latest fashion, they're eating at like all the latest restaurants, um they're buying concert tickets, they're staying in like fancy hotels, they're buying all like really the fashion trends. So I mean like he spent a music, right? A lot of like the music that we would listen to, like Abel always had like the best CDs. Um so yeah, I hope he wouldn't mind me talking about this. Maybe I should see if he would come on and like talk about it now. But I like now I think that he's really happy that he's gone through the process. And actually like I mean, he shares where he got his citizenship, which implies that he wasn't always a citizen. But I don't know. Like I should probably clear all this with him. And I wonder if he would come on and talk about it. Yeah, and I'm not saying like I don't know. Like I'm not I wish that the process to come in legally was easier and not quite as expensive. I think that's and I think that would actually like benefit everybody long term, but I don't know for sure. I don't know for sure. Um, all I know is I'm really glad that my friend's able to be here, and he was definitely like brought here. He was too little to have made that decision on his own. And certainly there were reasons that his mom chose to do that. In addition to just like wanting a good life, like there were things that they were getting away from as well, where he was from. But yeah, I'm glad he's here. Anyway, so the taxes, like what's driving me crazy right now is like all of the well, it's not driving me crazy, but I wish I had a better answer to what to do about like homelessness and things like that. Um and this is not going to come out right. The homeless people though, I don't know if they're putting money into the economy. Like so like and I don't know how these people got into this situation. And I will tell you, as much as I don't like paying increased taxes and things like that, I also like I feel for the people who are out there and I want to help them. Um and I don't know what the answer is on that. So yeah, I think that's where a lot of our tax money is going for. And then I think we allocate money from our taxes to help people. And then it gets like really caught up in like litigation because people don't want it like in their communities. Like we're like, oh, we'll give $1 million so that we can provide 15 units of housing. But then even though that money is set aside, they have trouble actually spending it because no one wants to allow the facilities to go up next to their house. All right, Debbie, we're going to talk a little bit about the movies. And then thank you for allowing me to like express my views also. I try not to get too political on the channel, and I always respect everybody's opinions. And this is just my opinion. I'm not trying to like force my views on anyone ever. I really love that there's different opinions and different ways of looking at things, and that there's certainly more people educated on this subject matter than I am. So I just appreciate the dialogue. Um, so I hope I hope I didn't say anything that really put anybody off. But anyway, the movies. So the Oscar nominated shorts, both the animated and the live action, that's what's kind of doing well at my theater right now because people like to watch those in preparation for the Oscars. And then a movie called Perfect Days by Wim Wenders. That's doing really well at my theater right now. Poor Things is still doing really well. Again, I don't recommend seeing that like with a mother or family, like your significant other, yes, a group of peers, yes, but it's a little racy. So Poor Things, that one's getting a lot of Oscar attention, so that one's still doing well. A lot of people catching up on that. All right, Lisa says, consistency in the law is what our country needs. Make it easier for legal immigration. We need better vetting of who comes in to our country. Yeah, and I definitely do think that that's an issue, right? And like, if people are still managing to get in illegally, that definitely means that we have some holes in our security procedures. But yeah, and I think it should be even though we need better vetting of who comes in, I also think it somehow needs to be faster, like faster but still thorough. I don't know if you can have both of those things when you're doing that. Because like for some people, it's like a years long process to get through it. Maybe we need more immigration lawyers, more immigration attorneys, more judges. I don't know. Okay, let's go back to talking about insurance. So we shared some auto insurance tips. We took a long way to get around there, but I gotta look into that program. The FAIR program, what is it called? Okay. I might take this one out. I feel like I've said some bad things. Oops, where's the thing? Sorry, I'm looking for that program. Okay, California FAIR Plan. We're going to share the screen again. California FAIR Plan. Okay, let's look into this. This is for homeowners insurance. So you guys may not know this, but it's getting harder. So I got a letter from my insurance company stating that they're going to drop my homeowners insurance. The company that I have used since I bought this house is it's just not going to be insuring homes in California at all anymore. So Sylvia, who also is a homeowner, and my mom both told me to look into the California FAIR Plan. So can't find fire insurance. The FAIR Plan provides basic fire insurance coverage for high-risk properties when traditional insurance will not. So is it just fire insurance that they make you have? Dwelling coverage. Our insurance policies are tailored to provide Californians with basic fire coverage when this coverage is not available from a traditional carrier. Work with a broker to find appropriate coverage. And I've always heard, I don't know if this is true or not, but this is what I've heard. I've heard that in California, even though earthquakes are a natural disaster that we might, come across, that basically the coverage is really bad, and then the coverage is kind of so bad that it's not necessarily recommended that you get it. So, but anyway, earthquake coverage would be coverage for individually owned residential properties and personal properties of tenants and condo owners through the California Earthquake Authority. Commercial, this would be for businesses. So that wouldn't be me. And then dwelling, coverage for owner or tenant occupied dwellings with up to 4 family units and personal property for renters and condo owners. Need more coverage. If you and your broker are unable to secure a policy from another company, your broker can help you find a difference in conditions policy, which offers additional coverages to provide the equivalent of comprehensive homeowners insurance, and ask your broker about flood and earthquake insurance to see if they might be right for you. How it works, and again, we're looking at the California FAIR Plan for property insurance. So this says, To apply for a policy, first you find a broker. Insurance agents and brokers may have access to property insurance other than the FAIR plan. If they cannot find you insurance through another insurance company, they can assist you in applying for a policy through the FAIR plan. There is no additional cost for having an insurance broker. 2, determine your eligibility. Your broker will perform a diligent search for comprehensive coverage in the traditional marketplace to determine if the FAIR plan is right for you. If coverage is available in the traditional marketplace, the FAIR plan is not right for you, then you need to find the right coverage. The FAIR plan's policies are tailored to provide coverage for basic fire insurance. Work with a broker to learn if a FAIR plan policy, along with optional supplemental coverage, fits your needs. Do I need a FAIR plan policy? If you cannot obtain coverage in the traditional insurance market, the FAIR plan may be a temporary solution. Why would that just be a temporary solution? Okay, and then this says our policies, but when I'm clicking it, nothing happens. Okay, what is the FAIR plan? Oh dear. Due to increased call volume, they are temporarily extending their customer service hours to Monday through Friday, 8 a.m. to 5 p.m., and Saturdays from 8 a.m. to 12 p.m. If you're a broker calling regarding access to Duck Creek or DMS, please select option 6 on the phone menu. Thank you. Okay. Protect yourself. Too often, people discover after they suffer a loss that they have not purchased enough insurance or the right kind of insurance coverage. It is your responsibility to purchase enough insurance and the right kinds of insurance coverages to protect you in case of a loss. Annual insurance checklist. Shop around for coverage with other insurers. Ask your neighbors who insures their properties. Ask your broker to try and find you more comprehensive coverages. Do not rely on just one source for insurance information. Read your policy. Consider purchasing a supplemental policy to cover types of losses we don't, such as flood, earthquake, or a difference in conditions policy. Okay, so flood insurance, that's kind of self-explanatory. That's if there's a flood. Earthquake, that's self-explanatory. That's if there's an earthquake. I don't know what a difference in conditions policy is. Work with your broker to make sure that the amount of dwelling coverage you have purchased is enough, and review all your coverages with your broker. I will say that for me, I am concerned about making sure that I have enough homeowners insurance if something were to happen to my house. So I would want not the value of what I paid for my house, but I would want what's called replacement coverage, which would be the amount in today's dollars that it would cost to replace um like my microphone and the things inside this blue room and the walls that make the blue room and the paint that paint the blue room. And I would want to make sure that I have coverage for all of those things. I also need to look into, of course, one of the concerns is making sure that I'm properly covered with homeowners insurance enough to satisfy the conditions of my mortgage with my bank. Okay. Need additional coverage. For more complete property coverage, consider purchasing the difference in conditions, flood or earthquake policies, which supplement the FAIR plan policy by covering most perils that we don't cover. The FAIR plan does not offer these coverages. Contact your broker for more information about them. Getting started. For more information and to discuss your insurance needs, please contact a licensed broker. Let's see here. I'm going to go back because I think on the last page, did I open this tab like 9,000 times? Hold on. Oh, it does not have good Google reviews. Okay. Our policies need more coverage. Applying for a policy. We talked about that. Do I need a FAIR plan policy? Yep. What is the FAIR Plan? The FAIR Plan was established so that all California property owners have access to basic fire insurance when access to the coverage in the traditional market is not available through no fault of the property owner. This is so interesting. I wonder how I become a broker. About us. Let's check out their about us section. About FAIR Plan. What is the FAIR Plan? The California Fair Plan Association was established to meet the needs of California homeowners unable to find insurance through the traditional marketplace. The Fair Plan is not a state agency, nor is it a public entity. There is no public or taxpayer funding. The Fair Plan is a syndicated fire insurance pool comprised of all insurance licensed to conduct property and casualty business in California. The FAIR Plan was established by statute California Insurance Codes Section 191, 10091, 10,091 et sequence in August of 1968 as an insurance placement facility. All licensed property casualty insurance, which write basic property insurance required by Insurance Codes Section 10091A and 10095A are members of the FAIR Plan. The FAIR Plan issues policies on behalf of its member companies. Each member company participates in the profits, losses, and expenses of the plan in direct proportion to its market share of business written in the state. The FAIR Plan has not been rated or evaluated by AM Best. The FAIR Plan is a temporary safety net. In the last decade, more Californians have turned to the FAIR Plan as wildfires have devastated California and some insurers have pulled back from these markets. While we will support homeowners regardless of a property's fire risk, unlike traditional insurers, our goal is attrition. For most homeowners, the FAIR Plan is a temporary safety net here to support them until coverage offered by a traditional carrier becomes available. We lead with our customers' interest at heart and reach success when we are no longer needed. Availability, coverage for rural and urban customers. Stability, backed by all property insurers licensed in California. And reliability, insuring high risk properties since 1968. Who we are / our promise. The FAIR Plan provides access to basic property coverage when it's needed, ensuring that all Californians, including those who live in areas threatened by wildfire, have access to the fire coverage and the peace of mind they deserve. The California FAIR Plan was established in 1968 following the riots and brush fires of the 1960s. We became the state's insurer of last resort, providing access to fire coverage for California homeowners unable to obtain it from a traditional insurance carrier. And it goes back onto how to apply. All right, we're going to read that one more time. So how to apply is number one, find a broker. And it says over here, a broker may be able to find insurance coverage with a traditional carrier, determine your property insurance coverage needs, estimate the fair market value of your home, handle changes to your policy, and answer your questions. Then you're going to determine your eligibility. Your broker will perform a diligent search for comprehensive coverage in the traditional insurance market. If coverage is not available with another company, your broker can help you determine if the FAIR Plan is available as a temporary solution. If coverage is available in the traditional marketplace, the FAIR Plan is not right for you. And then find the right coverage. And again, this is we're going to read about the difference in conditions in a second. Find the right coverage. The FAIR Plan's policies are tailored to provide coverage for basic fire insurance. Work with a broker to learn if a FAIR Plan policy, along with optional supplemental insurance coverage, fits your needs. And the California FAIR Plan does not estimate the fair market value of your home or building, the cost to rebuild it, its value, or the cost of labor and materials in your or any other area. It's up to you to determine that with the assistance of your broker. Difference in conditions. So this says many traditional insurance companies offer additional coverages to provide the equivalent of comprehensive homeowners insurance. I'm gonna read that in a second. We'll go over what flood is. It's a separate policy that can cover buildings, the contents in a building, or both in case of a flood. I used to be required to carry flood insurance on this house by the bank. It used to be in a 100-year flood zone, but they have since updated that, and I no longer have to pay flood insurance. And I want to say that I actually used to have to pay, I want to say it was $119 every single month, for probably like the first 10 years of this house that they made me carry flood insurance, and so I did. And I will say that now I don't carry the flood insurance on it. And what's interesting about just insurance in general is that oftentimes, due to things going on in our personal finances, we're just carrying the minimum insurance. So as soon as I was able to drop the flood insurance, I did drop the flood insurance. And then earthquake insurance is the coverage for individually owned residential properties and personal property of tenants and condo owners through the California Earthquake Authority. And with both of those that are natural disasters, I have heard that the insurance isn't necessarily very good. It doesn't really offer the proper amount of coverage. And that FEMA, although I've heard that they're not great to deal with either, FEMA, if your house is really damaged to the point where insurance would benefit you, FEMA is probably going to step in anyway. And that often cases, like if you already have insurance, it might actually make it more difficult for FEMA to give you a payment because like those two things need to communicate, which can like take more time. Anyway, differences in conditions. Woohoo. Okay. This is just a list of insurance that sell it. The following insurance offers a DIC product that complements a fair plan policy so that the consumer who buys both has the same or similar coverage as a traditional homeowner's policy. However, this is not a list of insurers that sell DICs that may be used to enhance a traditional policy to add perils or coverages not included in the homeowner's policy. Huh? Okay. Oh dear. What in the world? But this is just a list of people who carry it. It doesn't tell you what it is. Um anyway, so I will look more into that. All right, you guys. We've gone live for a little over an hour today. Thank you guys so much for watching. I really enjoy talking with you guys and having these discussions every Sunday morning at 11 a.m. Sylvia was asking if I went to church. So I've got a coworker who's trying to get me to go to church, but every Sunday we have a conversation about how this is when I've committed to doing my YouTube. So there may be one Sunday in the future. I haven't decided when yet where I'll try and let you guys know in advance where I might go to church instead. Anyway, have a great rest of your Sunday, and I'll see you here next Sunday at 11 a.m. We'll go over more finance and budget topics. All right. Have a great rest of your day. Bye-bye. Thanks for watching Shelly's Millions.